So this video is all about the impact of the coronavirus on the share market, particularly looking at the Australian share market or the Australian Stock Exchange, the ASX. But this can be applied to what's been happening in share markets all around the world. So you may have seen a lot of news headlines talking about the share market plummeting or the ASX crashing. There's billions and billion dollars wiped off. It's been the worst, the lowest it's ever been since the GFC, the lowest in years that it's ever been. You're right. That is exactly what is happening on the share market right now. And it's really good to actually see, well, what are the implications of this and who is mostly affected by it. So this is just a graph to show you what has actually happened to the share market since its last high on the 21st of February. Essentially, the S&P or the ASX 200 is when they actually take the top 200 companies on the Australian Stock Exchange and they look at how the value of that has decreased over time. So we can see that at the 21st of February, we're at 7,139. And in the early few days of March, it went down to about $5,700. Now, obviously, there was a little bit of it went up again, but since then it has continued to go down. So we're at the end of March now. So it has been continuously decreasing over time. So who is mostly going to be impacted by the share market and who is going to be impacted in particular by the drop in the share market? So the first one is your shareholders. Now, your shareholders are people who own part of the company. They own part of the company, are entitled to some of the profits through the issuing of dividends by the company itself. They have voting rights in the company, and they own a small slice. Now, what will happen if the share market plummets is that shareholders will see, one, the value of their investment decrease. So, for example, if they own $100,000 worth of shares in a company and the value of those have decreased, they might only be able to sell them now for $70,000 or $60,000. So they've lost $40,000 of potential profit and value in their assets. The second impact is that a lot of companies are currently not making much profit or in the near future will see their profits declining and are probably not going to be issuing profits in dividends to their shareholders. So they will see a lower return on their investment overall. The business itself is going to be impacted for a few reasons, but the main reason that the business is going to be impacted is that investors will not want to continue investing in that business. So mind you, in something like a share market crash, overall, there is not much investment happening in businesses in general. But if we're looking in isolation at just if your business share price starts to decline, what it will mean is that if the price is going down, there's no demand for the shares of your business. Now, why wouldn't people be demanding shares for your business? The main reason is you're probably not doing very well financially and you're not giving them much profits. So if you're not giving your shareholders profits, why would anyone want to invest in you? Now, businesses sell their shares on the stock market in order to gather funds that they can use for growth, expansion, investment opportunities. So if they don't have a really good share price or their share price has been declining, they will be seen as less of a guarantee of profits. And so investors in the future won't be investing in their business itself. The third impact by the crash of a share market, and this is what a lot of retirees are seeing now as a result of the coronavirus, is that it wipes off thousands and thousands of dollars off your superannuation. So I'll talk about retirees and superannuation funds sort of hand in hand. Essentially, superannuation funds are businesses that collect superannuation from employers. So when you work, your employer will contribute 9.5% of your salary into a superannuation fund. Now that fund will be they will take that money and they invest it in a range of areas. They invest it in property, they invest it in shares, they invest it in cash, they invest it in savings accounts, a range of different places. But in terms of that money, if we have a decrease in the share market, then all that money that was invested in shares also decreases in value. So the hope when you invest your money in a superannuation fund is that it grows. So by investing it, you're making profits, you're earning money, it's gaining value. When we have a decrease in the share market, we see those profits plummet significantly. So the value of your superannuation will decrease as the value of businesses and the prices of businesses decrease over time as well. So retirees and people who are nearing their retirement and say they had $200,000 and they were about to retire next year, if a lot of their superannuation funds were invested into the share market, then they would be seeing that their $200,000 could have decreased to $150,000. Now, $50,000 that you need to spend for the rest of your life is a significant amount of money. So in that instance, a lot of retirees, usually after global financial crises, tend to not actually retire straight away. They might wait and keep working for another few years in order to actually gain that value back and see how the prices rise over time. So we can change the plans of retirees. And in terms of superannuation funds, well, all the money that they've been investing has now lost its value itself. So these are the key players that are impacted by the share market. It has been decreasing. It's continuing to decrease. Who knows how it's going to end?